is everyone listening?
Meeting is now streaming live.
Hey, this makes me like this is never an easy thing, people.
All right.
All the people, yeah, we should be live.
Oh, shoot.
All you people who don't realize what goes on behind the scenes of these live meetings, just know this.
We just
It's a
deleted the
lot.
video.
It's a lot. It was a very entertaining video, but
All right.
so we're live. And I know that everyone has probably seen our special guest before on previous things we've been on, but do you want to go ahead and introduce yourself, Ryan, and all that good stuff?
Yep, Ryan Sanders, I'm mortgage consultant with Caliber Home Loans in Dublin. So
Yay.
happy to, catch people up to speed on the current lending environment and kind of the challenges that, not only homeowners, but lenders are facing right now.
Yeah, I think that it's important to talk about this, and I wanted to get you on because there's, I think a lot of misinformation. I think there's a lot of panic happening. I think that in the panic, people are not really understanding the consequences of maybe what they're seeing as a benefit or, a saving grace, and in the long run, it might not be. So there's a lot of topics today. If you want to just jump right in. And
yeah, I think probably the most pressing one, and I know one that we kind of hit on yesterday, but the biggest thing right now is, it's important to get information out there, but it has to be the right information. And I know right now that a lot of media outlets are picking up that the CARES Act that was passed last month allows for a forbearance on your mortgage. I was going to say for up to 6 to 12 months is in play. I was going to say,
really?
I think right now 6 months. Well, it's kind of doing it in increments of 3 months.
Okay.
And it varies by loan servicer. So who you make your mortgage payment to.
Okay.
They're going to have different strategies, anywhere from 3 months to up to 12 months.
So quick question.
Wait, hang on. For those people that may not know what we're talking about, what is forbearance? What are we?
Yeah.
Just break it down.
That's the important thing. So a forbearance, it's not like, student loans you can defer, and the payments. The interest builds on that and gets added on, so you end up paying more when you defer student loans, but it truly is extending the loan further out. A forbearance
for your mortgage.
Huh?
No,
I thought so. Do they add it on at the end?
No. So a forbearance is, so if you do a 3-month forbearance on so let's just say you start May 1st. So you have May, June, and July. Where's my camera? That you can do the forbearance. Now on August 1st, all 4 payments are due now.
Oh.
I
didn't know that.
Oh.
That's why I wanted to have him on, Amanda.
Oh,
I didn't
important. Realize that.
Yeah,
I thought it got added on to the end of your mortgage.
No. And this is, I think, where people, this information is so vital because no one is understanding that. Everyone's thinking, oh, great, I'm not working right now. I don't have to pay this.
And another thing is I've noticed that, people that can afford to pay their mortgage right now aren't wanting to because they hear of other people not having to.
Right.
So if you have the money, pay your mortgage.
This is not a freebie. It's not a benefit. So go ahead, Ryan. I'm sorry.
Yeah. No, the mortgage, and unfortunately I've had clients calling in affected, either hours cut or laid off or whatever the case might be. You need to make the mortgage a priority right now. It needs to be the first bill you pay right now. If you can get other payment plans set up for utility bills, cell phone bills, insurance. I know insurance companies are doing certain things with auto explore those options, but you need to be making, you got to make the mortgage right priority. Forbearance needs to be an absolute last option. Even
I'm sorry. I was going to say my concern with this is when people don't understand what the forbearance means, when those 3 months are up, they're not going to have, say my mortgage payment is $1,000 a month. I don't have $3,000, let alone $1,000 right now to pay that.
Right.
So
Yeah.
now we're going to start getting into a scenario, I think, where foreclosure proceedings might start happening, and we're going to see an uptick.
I was going to say, the CARES Act, it prevents foreclosure proceedings that weren't already in process prior to. It does put a hold on those for some extent. I don't know the exact, it's somewhere in that 3 to 12 month range again, but
so if they don't have the money to pay, say the 4th month, then that's when they could be starting like the short sale process.
Well, at the end of 3 months, like I said, you can extend it again.
Okay.
To 6 months, and then hopefully. So the big issue right now, and I know right now it's lenders are being painted out, or your loan servicer, whoever you're making your payment to, is being made out to be the bad guy. But the thing that people don't realize is the lender or the servicer of your loan, if you aren't making your payment, they still have to make the payment every single month. So typically, if you have, typically it's about 2% of people or so, 2 to 4% of people are, either late on their payments or, at some point in either the foreclosure or bankruptcy process. So lenders, they know that it's factored into their numbers. They're prepared for it. They can make those payments in advance for people. They have the reserves required to make those payments. But what we've seen is 2.9 million people sign up for forbearance in the last 3 or 4 weeks.
Wow.
Do you even have a number average, like what that would even look like?
Yeah. So that 2.9 million people every single month that are not making a payment is roughly $2.3 billion that lenders have to pay to the investors, because like I said, that payment is still being made by somebody, whether it's you or your loan servicer. That payment's being made. So that's, I know it's changing day to day, and actually the mortgage industry kind of got a partial win this morning. I was going to say the head of the federal housing finance agency came out and said that after 4 months, they will step in and start helping loan servicers with payments. The only problem with that is 4 months is a long time to be doing, $2.3 billion of forwarding payments or covering people if they're not making their payments.
Well, and the thing is, the money's got to come from somewhere. So where is that then?
That's the issue. And that's what lenders are trying to work. They're trying to work with the politicians in DC to essentially get liquidity in the market, so extra cash to the servicers to cover those payments, and then work out, and then to come from the U.S. Treasury to help make those payments, and then work out some sort of whether it's a 0 interest loan, or a loan at a certain interest rate, or just forward the money until borrowers start making their payments again. They're trying to come up with solutions. So it is changing day to day. I was going to say, unfortunately, there's the head of the Federal Housing Finance Agency is not necessarily in tune with reality, and said that both the loan servicers, the loan companies, and the individual borrowers should have been better prepared for an emergency. So,
well, all right then.
it's one of those cases where, kind of looking down from his throne in DC.
Right.
He's not necessarily in tune with what individual people and families are going through. And then
Yeah.
also, I mean, like I said, loan servicers factor in a certain percentage of stuff happens. You're not going to be able to make your payment, but to this scale, I mean, that's tough for even your biggest lending institutions, Chase, Wells Fargo, Caliber. I mean, you name it. Who's going to know that 2.9 million people are going to sign up for forbearance in a month? And that unemployment went from 3.5% at the start of this. It's at 17% right now. And the projection, I mean, it's going up 3 to 5% every week. So a lot of people are thinking we'll easily pass 20% unemployment, and 25% isn't, unheard of.
How much of it do you think is actually just people trying to take advantage of these benefits right now versus actual need? I mean, it seems that the jobs will be there. I mean, there's obviously going to be a few small businesses or businesses that don't have the capability to get through the weeks that have happened. But because I know, like, for me, my first thought was, oh my gosh, I need to apply for that loan. I'm going to go, like, everyone just immediately panics. You hear these benefits are available.
Yeah.
But the reality of what that actually entails is, obviously a very serious and different topic.
Yeah. I actually think I really do think that the people that are signing up for forbearance actually need it. But once again, they need to understand what the
I
forbearance.
don't think people understand it.
No.
Yeah.
Because I really thought that it got added on at the end of your mortgage. So you could just skip like a month or two if you couldn't afford to pay. And then that way, you had some sort of leeway. But, if someone can't pay month 1, month 2, then how month 3 are they going to be able to pay for 3 months? Because
I mean, that's exactly.
They're just getting back to work.
Right.
No,
right.
I mean,
and catching up on all other bills.
That's why I would need to get this information out to people.
Yeah.
I was
so
going to say on getting the links over. I was going to say one thing that can really help both. Like I said, I know the lenders are being painted out to be, the big bad wolf here or whatever, but we really need, like, the loan servicers are really fighting, the politicians. So we're going to get links out to where you can look up your Congress people and your senators and reach out to their offices and tell them, like, we need to help get, it's liquidity is the proper term, but we need to help loan servicers get, and lenders. I mean, you could just say your lender, but need to help them get liquidity, which is just extra cash flow into the market so they can keep making the payments until borrowers are able to.
Well, I think that's the biggest misconception, like we said before. People don't realize, I mean, it's not just the lender sitting back and collecting money and sitting on this pile of money. You all have also investors that need to be paid. The money just doesn't disappear. Like, you can't just print it and, like, here's cash, and then, or like, oh, well, let's just write this. I mean, that's not how the economy works. It's not, and people don't think that through. Or quite frankly, realize
it's huge. I mean, like, probably about every pension, retirement plan, every 401k, you're going to have what's called a mortgage-backed security, more than likely in it. So if those all start performing poorly, I mean, it's not going to be good.
Well, I think it's important to also note that we're not, recession, if we are in fact looking at a recession that's going to happen because of this, that doesn't mean housing crash, but we can prevent housing crash by people being educated on what is actually happening with the mortgage market.
Do you foresee a lot of foreclosures actually happening because of this? No.
I don't know.
Oh, you don't know. Okay.
Yeah.
I was just curious.
Like I said, it's going to be, I mean, lenders are really fighting for, well, I mean, for them to survive, but I mean, also, to look out for borrowers right now. It's still too early on in the process. So, and like I said before, there is, foreclosures that weren't already in process, are not going to be happening, due to the CARES Act. But I mean, at the end of it, you can keep kicking the can down the road, I guess, to use the phrase. But I mean, eventually, unless lenders are allowed to give other options, right now the only one is forbearance, and it does not get added to the end. Whenever your forbearance period ends, all the payments you missed are now due. Which, if if this was just a typical, you get laid off or you're in between jobs for a month, you don't have your income coming in for a month or whatever, okay, like you can, just forbear the loan for a month or two. And then once you go back to work, then you're making your income again and you can make the payment. But with this, we don't know how long this is going to play out. Here in Ohio, it's looking promising that, start of May, be able to start having some people, that haven't been, or, some jobs go back to more normal. But I mean,
right. There's still such unknowns, like nobody, we don't know what's going to open. We don't know if people are going to be going out.
Well, and it's not like they tell us either. They leave us in such suspense and this total anxiety driven, like, oh, what's he going to announce today? Right. What's he going to just
right.
But I think that there's no way to know how this is going to affect, but obviously you can see if all the stars align, so to say, it would be clear that there will be people in financial
straits. I mean, that's impossible not, and I even people are in it now because they're, our unemployment's not really doing the best. I mean, it sounds like the best job to get people.
No, I mean, to go from 3.5% at the beginning of March to 17%, and we're not at the peak probably yet.
No, it's crazy.
I mean, so I mean, to give people context for watching, I mean, during the housing crash, the most people that were unemployed in a single week was around 690,000. We've had over 5 million people a week for the last 3 weeks apply for unemployment. So the crash a decade ago, 690,000 was the record. We're having 5 million people a week for the last 3 weeks apply for unemployment for the first
applying though, because they can. They're not, I mean, they will, their jobs are, they've all lost their jobs. No, I'm saying, but the company they work for may be shut down at this point because of lockdown, quarantine, whatever it is, but the job will be there once it's opened again, hopefully.
I mean, a lot of people are going to have to cut back because they don't have any income,
right?
So
I mean, just to speak personally, I know my dad just got laid off last week, and his company, he's an engineer. They make parts. The company lost over 50% of their sales for the year.
Wow. Just in the last month.
In the last month. Yeah. So it's not, I mean, I wish could sugarcoat it and say it's going to be dandy and we're going to jumpstart, quickly, but I think it's going to take time because, I mean, people are going to be maybe a little bit more reserved and probably play it cautiously, versus, because out of that 50%, I mean, maybe 20% of those sales come back, but I mean, that's a big, big numbers.
It's a lot. Is that just in Ohio, those numbers, or is it countrywide
that was just my dad's company.
No, I mean the unemployment filing.
Unemployment's nationwide.
Nationwide, yeah.
Yeah, so over 5 million people a week for the last 3 weeks.
Yeah.
So I think that we should also just touch base kind of quickly about credit score changes.
Yeah.
Yeah.
Well, that's well, really quick, just on the forbearance. I know, Jenny, you asked, is it people that are actually need the forbearance or is it people just taking advantage of it? I think so. Right now, only about 5.5% of loans, which is still crazy, but only 5.5% of loans are in forbearance as of right now, and we're still talking about 2.9 million people, versus your unemployment's at 17%. So I
So
think,
it's,
the forbearance numbers should probably, based off of the unemployment, be even higher. So I think that's a good sign that, I think that the need is really people that are in need. If you got the stimulus check, if you qualified for that, the first thing I'd be using for that is the mortgage, because other things rates are really favorable right now, but there's, most loan programs require you to make your last 12 mortgage payments on time. If you do a forbearance, you may not qualify to refi at a lower rate. So that is another thing that you want to keep making your payment, because that could affect your ability to refi or purchase a home in the next 12 to 24 months. If you have payments, they're not late necessarily, but they weren't made on time either. So that could affect your ability to either buy a new home at a low interest rate or to refi, into a lower rate as well. So, that's another thing that you have to consider when looking at the forbearance is, am I looking at moving in the next 2 years, or would a refi, help my financial picture to where my monthly payment can be lower? I can look at a 15-year option and pay the mortgage off faster at a lower interest rate. Just different, or, could I benefit from doing a cash out refi and paying off high interest credit card debt? All those things could be at stake if you do a forbearance unnecessarily. So, that's another thing to consider. And then, Amanda, to hit on your,
I guess one other question, would an option be to take out a home equity loan to pay your mortgage? Can you do that?
Well, you could, but so home equity lines, they have higher credit score requirements, even in a normal environment. If your job's affected, then, you still have to, you have to be employed when you're getting a loan, because, part of the process is your ability to repay the loan.
Okay.
If you're not making money, then, it's
okay. Well, I don't know if you could do like a small amount just to pay off your mortgage or something. I don't know.
Yeah,
it was just
I
something
think
that came to mind.
Better solution, and obviously, big caveat: talk to your financial planner or advisor, or if you're still employed, HR. Other options to make your mortgage payment right now. You could look at a 401k loan, or if you have retirement accounts. But like I said, consult with your financial advisor first, if that's the best option, or, consider other options. But that might be something to look into, or see if your plan allows for stuff like that. But that could be an option to continue to make your mortgage payment as well. And then you can, like on a 401k loan, you can repay it then. I think generally most 401k loans that I see are 60 months, so you can pay it back over the next 60 months. So, that could be an option to explore as well with, your financial planner, advisor, HR, whoever. So, lender, it's varying across the board with lenders, but most are raising credit score requirements right now. I know we went from a 580 on our FHA, VA, and USDA loans to 620. There was an article that circulated last week that was saying Chase was going to a 700.
I saw that. Yeah.
I've heard other colleagues at other companies, 660, 680. So credit score requirements are going up. Debt to income requirements are going down. So, your monthly payments compared to your income. Let's just say you make $5,000 a month pre-tax, and your monthly, between your mortgage, credit card payments, auto loans, student loans, let's just say all those payments come to $2,500 a month. Your debt to income ratio is 50%. So, but now instead of 50%, the cap might be 40%, or, you know, that's going to vary by lender.
Mm-hmm.
But so we are seeing, you know, additional precautions being taken there. Also, this is varying across the board, but I know, so in a normal environment, there's what's called a verbal verification of employment. So when you're going through the loan process, you're going to provide W-2s, bank statements, tax returns, bank statements, things like that. And then the lender is going to get with your HR, or if you're with a smaller company, you don't necessarily have an HR department, a manager, or, you know, the owner of the company. They're going to do what's called a verbal verification of employment. And, you know, just verify that you're still working. There's, you know, horror stories of people, you know, either getting fired or let go right before they close, or in really bad situations, just quitting their jobs.
Yeah.
So, but now instead, typically that verbal verification of employment happens within 10 days of closing. Now, some lenders are doing it at the closing table. Others are, you know, pretty much everybody's down to 3 days now. But like I said, there are some lenders out there that are doing that verification at closing. So
Wow.
literally on
Yeah.
the phone with HR while you're signing the paperwork. So
Yeah.
those are, you know, and then typically you provide pay stubs when you're in contracts, your most recent pay stubs for the last month. I know at Caliber, we're requiring your pay stubs all the way up until closing now. Just
Really?
just because it is so day to day. Like I said, I mean, 5 million people a week right now being laid off. So, you know, we're getting pay stubs now up to closings. Like I said, that's varying across the board, but most lenders are, you know, doing some sort of extra steps that you
Sure.
typically wouldn't have.
Sure.
Are things taking longer to close, do you think?
Well, it just depends. I mean, you know, just like you guys know, there's some lenders that in a normal environment are, you know, 20 days, and then you have other
Mhm.
lenders that are 45 days in a normal environment. So
Mhm.
the same kind of time frames are going to apply
Okay.
right now, just like in normal. You know, you're going to have some lenders that are on top of it, and then, you know, crazy stories right now. I've heard of some lenders doing 100-day closes right now.
Really?
But so, and then the other thing to consider too is most lenders, we all love you guys and want to help out, but most lenders are going to give priority to purchases, just because, I mean, we're working with a contract here, and you know, there's set deadlines that need to be hit. Otherwise, you know, the penalties can come into play. You know, it can just create snowball issues with late closings. So most lenders are still going to give a priority to purchase unit. So if you are looking at refinancing, just know that, you know, it's going to be, you know, probably more like in the range of 45 to 60 days. Versus a purchase, you know, still want to be in that 20 to 40 day closing range.
Yeah.
But so, I mean, time frames. I mean, this is just all this extra work now. You know, it's extra work for the lenders and our support, our operations teams. So, you know, it's additional steps that aren't normally part of the process. So, yeah, I mean, just, you know, I know in a normal environment, you know, can do like a 15-day close if really needed. Just kind of set your expectation that it's going to take a little bit longer. You know, if there's extenuating circumstances, talk to your lender, explain why you need to close faster, and see if they're able to do it or not for you.
Hey, Ryan, someone asked, Joseph Capehart asked, what's a refinance interest rate credit score is almost 800, still employed every day?
As well, yeah, it depends.
General.
What his loan to
Average.
value is, a bunch of different things. But I mean, if he was looking at a 30-year fixed, an 800 credit score, It'd be looking at 3.25 to 3.5.
Yeah.
Um,
So Joseph, you can reach out to Ryan if for more detailed questions. It's not, there's subjective stuff that he's going to need to ask and get answers from to give you. But yeah, so average general 3.25 to 3.5, you said?
Yeah, for top tier.
Yeah.
Meaning 800 credit score would be good. So, but yeah, what's his loan to value? There's a lot of variables.
Yeah.
Yeah.
So we'll have Ryan's information linked in the comments too. His name is linked in the post, so you could certainly message him there. But you have other links that you wanted to include too. So again, circling back to the forbearance regarding that, what would you like people to, what information would be a takeaway?
Yeah, like I said, if you can help out the lenders here, we're the Mortgage Bankers Association and the heads of the big companies right now are trying to work with Washington to essentially get credit lines to the servicers. Like I said, those payments, regardless of who they're coming from, are still due. So, if you can reach out to your Congress people and kind of ask for them to work with the lenders and, set up, have the Treasury or what's called Fannie and Freddie set up essentially kind of emergency lines of credits for the lenders right now, so they can continue to, be solvent and have enough cash available to continue to make those mortgage payments until borrowers are able to. That would help everybody. Like I said, lenders are going to keep fighting the good fight, but the more people that are reaching out and having your elected representatives, fight for you right now, will certainly help. And then let's see. Yeah, I think that was the big thing. I don't know if might have to save this for another episode for kind of just setting up like an emergency fund and stuff like that for in the future, or can kind of give the spark notes real quick.
Yeah, absolutely.
Okay. Yeah, I know yesterday when talking, I think all of us on the call would agree that this is not going to be the last time we're going to have a financial crisis. A decade ago, it was, as a expert in the industry said, the financial system needed its plumbing cleaned out.
Absolutely. Yeah.
There was a lot of mistakes being made by, tons of institutions in the mortgage industry. That, a lot of those issues have been addressed and solved. Now this one, it's a medical issue that is kind of leading this recession. Around 9/11, there's been, we don't really know what's going to cause the next financial crisis, but we can all pretty much guarantee there will be another one. It's just a matter of time. So the other link I wanted to include was to a podcast. Tony Robbins is a life coach that a lot of people are pretty familiar with. He just posted a podcast within the last 2 weeks with a financial advisor on there. And the big thing that I took away from it was she talked about building your savings up and your security blanket. And I was going to say, the one thing that I really liked that she did is she called it her 3 keys to saving. And the first one was to automate it. So, out of if you're employed with, just have a portion of your paycheck every single or week or biweekly or monthly, go into a savings account. So you don't even have to think about it, or, same with your 401k. Just automate it. It just comes out of your paycheck. You don't have to, we all like easy. So you don't even have to think about it. You don't have to have that mental battle every single month. Do I put this $100 in savings, or do I go buy that new t-shirt that I wanted?
That's how I need to roll. I don't want to think about it or do it.
So automate it. The other thing she suggested doing was label it. So let's say you want to go on a vacation this summer, and it's it's going to be $5,000 for your family to go on vacation. In your savings account, label it vacation, new puppy, new car, like whatever it is, because now once again that $100 pair of shoes or whatever. It's like, do I take that out of the vacation savings, or man, I really want to go on that vacation? So label it.
Man, those shoes are cute.
Yeah. But if it said savings, it's easy to take the money out.
Yeah.
But if it says vacation,
Yeah.
you might think twice, and then you might not touch it. And then the last thing, hide it. And what that means is don't have your checking and savings accounts with the same institution. I really like money markets just because they have typically higher interest rates than what you're going to get at a brick and mortar, your big bank. So if you put money in a money market, the other thing is, typically with a money market, when you try and transfer money out, there's a holding period. So once again, you have to think, it's not instantly.
Not easy.
Yeah, it's not easy. And then, if it's a 3-day holding period or whatever it is, you might be like, I really didn't need that new pair of shoes.
Yeah.
Let's go ahead and move the money back. But anyways, if you hide it, it's not in this, like with the same institution that you have your checking with, it's not easy to just transfer the money over. And it's not, honestly, if you're not looking at it all the time, because you're probably not going to check your money market or savings as frequently as you do your checking, then you might honestly just kind of forget about it. And then, or, maybe, I don't know, once a month, once a quarter, kind of just check in on your money market. And if you have those automated deposits going into your money market or savings account outside of where your checking is, then it can grow over time. And then, you have a security blanket built up to where now you don't, like, if like I said, this isn't going to be the last financial crisis we all have in our lifetimes. Now you have a security blanket, and you don't necessarily, you are more prepared versus having to do a forbearance or some other kind of drastic last option on your mortgage payment. So certainly, right now we're where we're at, reaching out and trying to get DC to work with us all more. To get options to, like Amanda said, like add it to the end of the loan, or other solutions I've heard is, let's say you miss 3 payments, let's spread them out over the next 24 months. So if your mortgage is normally $1,000, now it's $1,200. So now you have to pay an extra $200 to make up for those payments.
Yeah.
So we need to try and all come together and make other solutions. But yeah, just really understand what the forbearance truly means. All those payments are going to be due the first month after your forbearance period ends. So just really understand that.
I think that's a scary prospect.
Yes. Yeah. It'd be scary for a lot of people. So
yeah.
I'm glad that I even know that. I didn't know that. So
yeah. Surprise.
No, it's not being communicated well.
No,
at all.
not at all. Not at all. That's why I thought this was so important. Did you have anything else? I mean, we'll have the links to everything in the comments. Joseph, Ryan will just reach out to you, because he's asking, I think he's considering refinancing. So that's probably a more in-depth conversation. And was there anything else to cover?
No, I think if anybody has questions, then they can reach out to us or Ryan, and we can get those answered for you. I know there's a lot of specific questions, but we'll also have
I was going to say, really, you want to reach out to whoever you're making your mortgage payment to, and just be patient. I know my company, we had over 3,000 people sign up for forbearance in just a single day.
Wow.
So please be nice to the people in your servicing departments with your lenders. They're not trying to ignore you, but they're literally 2.9 million people.
Everyone's overwhelmed.
Everyone.
They're overwhelmed.
Period.
Just breathe. Please be patient. I know at Caliber we've set up self help on our website. So check your servicer's website to see if you can sign up. There's options for some servicers. You can sign up for the forbearance on your online account. So look online first, and then if that's not an option, because I know not every servicer is going to do that, just be patient and be nice, because they're right in the thick of it with you guys, and literally, I mean, dealing with a lot of unhappy people right now. So please be nice to them. They're really trying their best. It's just not a fun situation for anybody right now.
No.
Yeah, no, it isn't at all. It's a lot of stress, a lot of panic, a lot of unknowns
Yeah.
about everything.
We're all in it together, I suppose. So
Yeah.
Yes, we are. Be kind, be patient, be nice.
Yep. That's all I got.
all right. Well,
Well,
thanks
thank
for joining
you.
us. Yeah.
Yeah.
Thanks for the information.
Yep.
Always
Thanks for having me.
that I think it's so important. It's important
Mhm.
for everyone to understand exactly what we're looking at with all this. So thank
And
you.
I think like a quick note too is like we're not seeing a crash right now
No.
within the market. We're still seeing multiple offers. So I think that's
Yep.
kind of important to put out there too. I know there's a lot of people that are having, issues, and but I know a lot of people are also scared that should I buy a house right now because of the crash. So, but we're not seeing that right now.
No,
So
not at all.
I think that's important to put out there as well.
100% it is. Yeah.
Market's still hot. Well, I guess you guys might probably be able to provide better statistics, but I feel like the number of new listings is down.
It is for sure.
It is.
Which
Yeah.
but there's still the buyers out there. So,
Yeah.
I think that we'll see a pickup, maybe end of May.
Yeah.
Yeah, I think
But-
once everything starts to settle down, I think
Yeah.
there's, it's not even just, I mean, people
There's
just
still
don't
a
want
lot
people
of
in their houses
unknown.
right now. I think
Right.
that we're doing as best we can to manage showings and listings. I think the people listing right now and buying right now are people who have to. It's not maybe
Mhm.
someone who just wants a different kitchen or,
Yeah.
Yeah.
it's
Yep.
so it's understandable that it would be down.
Yeah, I just thought that was important to throw out there.
Yeah.
Yes.
No,
Yeah.
I mean, I know I'm working with several first-time home buyers that have leases up and they really
Mhm.
don't want to renew. So they're not in a position where they can necessarily wait for this to play out.
Right.
Mhm.
So,
Yep.
yeah.
Yeah.
And as far as what I'm seeing on appraisals and stuff, I mean, we're not seeing a dip in any home values.
No.
So, I mean, this.
Yep, like I said, there's still multiple offers
Mhm.
on most
Mhm.
properties.
We won't see the true impact of this for, another 12 to 36 months, maybe even longer than that. So, yeah, it's going to take a while to see how this all plays out. So, but yep, make your payment on your mortgage if at all possible.
Right. Yeah. That's the key takeaway today.
Not to be a broken record player, but yeah.
Yeah. So, all right.
All
Well, anyone with
Thanks, guys.
questions, comment below, reach out, DM, whatever, call.
Mhm.
We'll have all the information. And thank you so much for being on. And bye.
Until next time.